Well, first up, the Ghana Revenue Authority, GRA, has announced that effective the 1st of January 2023, the discount policy on vehicles and general goods that were introduced or that was introduced in 2019 by government will be abolished completely. This follows parliamentary approval of the 2023 budget statement by the Ministry of Finance, which outlined cancellation of the policy as part of revenue boosting measures at the country's ports. Now, this formal communique issued by the Commissioner General of the GRA will mean that importers would pay the full duty on all general goods brought into the country as well as vehicles. Joining us is President of the Ghana Union of Traders Association, Dr. Joseph Obeng, with reaction to this. Season's greetings, Happy New Year to you. I want to first start with this. You have been against the reversal of this policy, but as it stands now, it will be effective from the 1st of January. What would this mean for traders' businesses?
Yeah, thank you very much for this opportunity. As you said, we've been in support of the benchmark discount because it came to mitigate the plight of the trading community as well as the consuming public. But as it were, the argument now is that the reversal, the benchmark discounts have made import cheaper to the extent that local manufacturing entities are not thriving. So in that case, government have to listen to the pleas of AGI for the complete reversal of the discount that was helping all business entities, including AGI itself. What it presupposes is then, therefore, that duties are going to go up about 40%. Don't also forget that VAT have already been up by 2.5%. And then it means that cost of doing business is going to go up just after the Christmas festivities. We have to contend with high cost of doing business. That will translate into the prices of goods and services in the market. So the little gain that we had and transferred to the consuming public is going to be taken away by this reversal. We thought we were going to itemize all the goods that are produced in this country, and so we give this, we reverse the benchmark on those items, but not for every goods that is imported into the country, because our import requirement, we can source only 10% in Ghana. When we look from within, what are the goods that we are going to get from within? We are going to get about 10 to 15%. And the remaining, we have lumped all this reversal to them, means that goods are going to go up astronomically high because duty rates are going to go high with the increase of the VAT as well.
Well, this is interesting, especially at the time where there are calls on traders to reduce their prices following the recent gains we have seen the CD have against the dollar. It looks like that wouldn't happen.
Yeah, it's going to take that gain as from 1st January, as they've said, because if you have the commitment to mitigate the plight of the consuming public, then we have to look into all these things, these factors, because we look at these factors and do our costing. We are not Father Christmas. And so whichever additions that come in the cost of doing business is added up to the consumer who is buying the final commodity. Unfortunately, by the full reversal of this policy, this is what is going to happen. And Ghanaians should also hold on the AGC, because the essence of this reversal is to make import very expensive, so that, as AGI said, their goods will become cheaper, so that they will be more competitive in the market. So we are going to look from within and see if we can get these products also from the local manufacturers, because the essence is not to import only, but that if you have the goods also from within, then we have to buy, because it will also help us not contending with the duty payment and all that. But let's see if it will, this is going to translate with all the leverages that the local industries is having, they are unable to transfer the gains or the leverages that they have into translating into competitive pricing for us to patronize those goods. Apart from the fact that we do not have those goods in abundance or in many, but we do support that the local industries thrive, and that's why we are not talking against this policy. But I think we should have just examined those goods that we can get here, and then remove the policy or remove the discount. And then those that are not produced here, the discount could have remained. Yeah.
So does that mean an end to engagements with government on this matter? Like you said, you would have rather wished that some of the goods may be exempted, looking at what is produced locally. Would you be seeking other reliefs?
It has gone through the Parliament. Parliament, out of its wisdom, the two factions have all agreed that it should be passed on. And sometimes we have to make these things work so that we see the effect. If it is positive, it will be good for all of us, especially when it is for enhancement of local industrialization. Then, of course, if we talk so much about it, then we are not being patriotic.
Okay.
And that's why we want to give it a chance. But the onus lies on the local manufacturers, local industries, to justify that the reversal have actually helped them to be competitive for the benefit of the generality of Ghanaians. So it shouldn't be that this one too has been passed and they will still come and complain that imported goods are competitive than them. Because we have said that cost of doing business in this country is very high, and that is the bane. And it is not the benchmark reversal. We have said that cost of borrowing and other factors, cost of electricity, and other many factors that mitigate against the manufacturing sector. But they are not looking at that direction. Yeah.
One of the issues that has affected traders this year has been the performance of the cedi. It's one of the reasons why Gutta threatened to close down shops and all. Well, in the recent week, we've seen some relative stability. How confident are you that this is going to last?
Yeah, sustainability is the key. And we've just started, we are just entering the new year. And so whatever policies that government have to introduce or what they have already introduced that is working to stabilize the cedi should be continued. Otherwise, if depreciation resurfaces, then we don't know what is going to come because of the high rate of duty that is also going to come. Don't forget that VAT is also up by about 2.5%. So it means that our costing is going to be affected negatively against the consuming public. So we think government should make sure they are able to stabilize and sustain the gains that we are getting so far, so that at least we will be compensated in that way.
Are you upbeat about next year? What are your expectations, the trading community?
Yeah, if you look at these factors and what is yet to come, I've already told you about the increase in VAT, and then I've also told you about the duties going to go up because of the reversal of the benchmark. We are expecting that duties is going to go up cumulatively about 40%. And if you add the effect of the VAT also, because that one is also factored at the port, and probably if they change the foreign exchange rate for the purposes of duties, then we are going to expect about over 50% increment in the duty payment, and that will reflect on the prices of goods in the market.
All right. Thank you so much for your time, and Happy New Year once again, Dr. Joseph, for being president of the Ghana Union of Traders Association. I appreciate your time. Now, research and market information firm Face Solutions expects Ghana's revenue collection to improve significantly next year on the back of an increase in the value-added tax rate and other tax measures. However, it is worried the expenditure estimate for next year is well above the 2022 target, considering the weak fiscal position. Speaking on the outlook of the Ghanaian economy next year, a senior country risk analyst, Mike Kuniga, was worried that the 2023 budget was expansionary rather than a tight one that failed to address the weak economic fundamentals.
The Ghanaian Minister of Finance, Kenneth Oriata, presented the 2023 budget in late November. As we expected, the budget details a couple of pretty significant tax reforms in order to improve revenue collection, including an increase in the value-added tax rate to 15% from 12.5% previously. The finance minister also announced the introduction of a new income tax bracket of 35%. And given that income tax is a vital source for fiscal intakes for the government, we do expect these measures to boost revenue collection in 2023. However, the 2023 budget was significantly more expansionary than we had anticipated. While the Minister of Finance did announce a couple of spending reforms, including a hiring freeze for public servants and placing a cap on salary adjustments at state-owned enterprises, he did not announce large-scale spending cuts. Indeed, the spending target for 2023 is well above the 2022 target.
Well, now prices of petroleum products are expected to go down by about 5 and 10% beginning this Sunday, January 1, 2023. This follows a slight improvement of the Ghana cedi to the dollar during the last 2 weeks and a slim reduction in the price of crude oil on the world market. Already, some smaller oil marketing companies have reduced prices of petroleum products at the pumps. Joining us on Zoom, Fitz Moses, research analyst with the Institute for Energy Security. Season's greetings to you, Fritz. What is the basis for the anticipated reductions?
Very much, many appreciations. So, like you stated, we are seeing a fall in prices on the international markets, particularly for petrol and LPG, and also the crude oil itself to national markets. So, on the last price, that's the second price of the crude oil prices fell by some 0.5%. For petrol, prices have been going down around 5.09%. Diesel prices saw a marginal decrease of about 1.1%. LPG also fell by some 5%. And of course, with the consistent stability of the cedi and the appreciation that we recorded over the period, about 6.5%. We are seeing, we anticipate the prices of further.
Fritz, would appreciate if you could speak up. We are struggling to hear you.
Okay, is it better now, Dario? Can you hear me?
Yeah, it's far better.
Great. So with the expected, with the cedi appreciation that we recorded over the last pricing window, we are anticipating that for the various finished products, petrol and diesel at the various points, you would see some slash in the prices, and of course we are anticipating that some OMCs that are currently selling around 11 cedis per liter for petrol would sell around 9 cedis, 50 pesos per liter at their pumps. We are expecting the diesel price to fall from the current price of around 50 cedis to about 13 and 12 cedis per liter at the various pumps. LPG prices we are anticipating will go down around 10 cedis per kilogram.
Okay, we're going to try one more time because it's really difficult to hear you. Would appreciate if you could speak out. And so with these reductions and the seeming stability of the cedi that we have seen over the past few weeks, are we in for a good year in 2023 when it comes to pricing of fuel products? You're muted. All right, can you hear me, Fritz? Looks like we are having...
I can hear you, Dario. Can you hear me?
All right. So did you get my question to you?
Yes, I did. So certainly we are anticipating that oil prices would, oil prices especially would hover around $85 to $90 per barrel in the next year. Of course, with the actions or activities of OPEC Plus, they are looking to push prices further to around $120 per barrel. If that should happen, then of course it would spell it for we consumers because it would lead to an increment in the prices. But what we are seeing, especially in the first quarter of next year, is some stability in the prices that we are currently seeing at the various forms, petrol and diesel especially. We are hoping that the steady strength that we are seeing in much recent weeks would continue to remain as it is. But of course, if other factors, if that continues to depreciate, then it would affect the price that we are going to see in the next few months. Okay.
Well, we are seeing new threats of a wave of a COVID-19 pandemic, the Russia-Ukraine war not ending anytime soon. How will those two factors impact the markets in 2023, do you think?
Yes, of course, those are all, especially for the new COVID wave, it's very good for demand for oil producers. And in the sense, in the event where demand is falling, the supply will also have to be cut. And so we hear OPEC Plus decision, or they are expected decisions to cut down production about 2 million barrels in next year. That would, of course, be in tandem to an expected fall in demand. But in the event where we are seeing a demand increase where, despite COVID re-emergence in some major economies, if the demand still does not fall as we are anticipating, then the supply is, as we are seeing now, then certainly prices would be headed towards a reduction like we see in the market.
All right. Thank you so much, research analyst with the IES, Fritz Moses, there on the update on fuel pricing. Beginning the 1st of January, we expect that fuel prices would drop between 5 to 10% as the projection by the Institute for Energy Security. Now, the Ghana Enterprises Agency has hinted of plans to focus some attention to support SMEs in agribusiness with funds. This is part of moves to increase the country's food production and reduce over-dependence on imports. Chief Executive Kosi Yankee disclosed that some funds will be realigned to ensure that SMEs in the agri sector benefit from government's growth program.
The focus on agriculture and agribusiness and import substitution without it being written as such. But it's something that we need to look at and pay close attention. And I think it's also an advantage to a lot of SMEs. And so how do we harness those SMEs to actually take advantage of improving their productivity and increasing production so that they can support the nation? And this is something that we're looking at closely. One of the things we've done is to realign most of our interventions to support the agribusiness sector. And in the coming months, we're looking at also how the funds that we are receiving would be aligned in providing access to finance for agribusinesses that are along the value chains that will support government and the nation for us to address some of the challenges that we're currently facing.
Well, accounting and auditing firm KPMG Ghana is challenging government to continue with initiatives that will support the growth of the small and medium enterprises through access to cheaper funds. According to senior partner Anthony Sapon, the economic crisis can be overturned in the medium term if government prioritizes growth for the sector. He also advised multinationals operating in the country to adopt a hybrid style of work for staff rather than embark on massive layoffs.
In the medium to long-term measures, we'll expect government to continue to focus on revenue growth, tax revenue. They're already doing some of it in terms of using digitization to identify taxpayers and to deepen tax revenue. Those measures will continue. The effect will be medium to long term that we will have that. Second, government should continue to focus on growth. Growth in a sense of revitalizing our entrepreneurial initiatives. Again, these are areas government has tackled, and we would expect that the crisis will not stop government from moving away in terms of providing affordable access to capital, in terms of providing facilities that create standards and efficiency in production, and in terms of facilitating access to market. If we do some of these things over time, then gradually growth will improve, outcome will improve, people's income will improve, people will be lifted out of poverty, and eventually will move out of this crisis.
Any projection on job losses or employment in general when you look at the outlook?
So that drives me back into the corporate setting, as you asked earlier. So in terms of corporates, the environment, again, is going to be challenging for them. Rising costs, and therefore, if you cannot pass on your prices to consumers, what it means is that you're going to have dwindling margins, and your cash flow is also going to be tight, particularly in inflationary season where demand is expected to be tamed based on the monetary policy that government, Bank of Ghana, is pursuing. So what could happen is that revenue and growth could be tamed, costs will rise, and margins will fall. So for companies, what they need to do first is to really look at their strategy and say, what can we do best in this particular situation and generate the most revenue out of it, and ensure that they focus on that. Then also look at the welfare of the employees, because at the end of the day, in the short term and in the long run, what will make a company resilient and sustainable is to ensure that they attract the best talent and they're also able to retain them. By retaining human beings with good employee experience and value propositions, and in difficult times like this, what kind of welfare situations that you can put in place. So for companies that can sustain and manage with their workforce, they are encouraged to do so. And those that could not can then look at how they restructure their workforce such that it can minimize costs, but at the same time employ them. In that respect, for example, COVID has taught us a hybrid. Instead of the traditional layoff, could we have, if a company has to, for example, face a situation of laying off people, could we have a situation where people are working part-time as opposed to being laid off eventually, because there's expectation that growth will rebound in the short term to medium term, and therefore you need some of these people back. So back to your question, yes, in the current situation, workforce can be challenged, layoff can be challenged, but one would expect that in our situation, particularly in Ghana, despite all the challenges, we will expect some growth as opposed to the developed countries where they will have a recession. And therefore, even if it happens, one would expect that it's very, very minimal and should be a short term.
You're watching The Marketplace. We are taking a short break. We'll be back with some more stories.